Take a deep breath. Yes, I'm back. But step away from that 1-minute chart and look at the bigger picture. Because while regular traders are freaking out over a small drop on paper, the really smart big money is quietly getting ready for a huge upward move that could change the whole global money system. It's Tuesday, February 10th, 2026. Gold is staying steady at $5,050. Silver is battling between $72 and $80. And while you're scared the bottom is falling out, the big institutional experts are staring at the ceiling. They're seeing that the ceiling is way, way higher than most people want to say out loud. We have to talk about Merkin Capital. We have to talk about Daniel Oliver. He's one of the few guys who really gets how currencies fall apart in history. And he just put out a report that makes today's gold price look tiny. He's not saying $6,000. He's not saying $7,000. He's saying the real fair price, the number the math says we need to fix the system, is between $8,395 and $12,595 per ounce. Here's the simple math that TV news won't show you. In history, when a paper money system hits its breaking point, when the debt gets too big to pay and people lose trust, the central bank has to fix things. How? They back their money with real stuff like gold. They don't need to back every single dollar 100%. That's not real. But history shows they need to back 33% to 50% of the central bank's stuff with gold to stop crazy inflation. Look at the Federal Reserve's books right now. Look at the trillions they printed, the reverse repo stuff, the bank reserves. If you take that huge pile and say it needs 33% gold backing, gold has to jump to $8,000. If it's 50% like in past big problems, gold hits $12,000. This isn't guessing. It's just basic division. Total debts divided by gold ounces equals around $12,000. But why right now? Why 2026? Because of the Fed trap? This is the hidden mess that Kevin Walsh, the guy Trump just picked to run the Fed, is trying hard to keep quiet. The Federal Reserve is actually broke right now. They're losing money big time. Specifically, they're losing about $245 billion a year. Why? They printed tons of money to save banks. Now they pay 5% interest on those reserves to control inflation, but the bonds they bought long ago only pay 2%. They're paying out 5 and getting 2. They're losing $250 billion in value every year. This is a deadly loop. Kevin Walsh can't fix it by raising rates. If he raises rates to fight inflation, the Fed loses even more money and the US government can't pay its debt interest. If he cuts rates to help the government, inflation shoots up and bonds crash. He's stuck. There's only one way out. There's only one way to fix the Fed without printing more junk money. Revalue the gold. You take the gold sitting in Fort Knox. You change its price from the old fake $42 an ounce to the real market price like $12,000 an ounce. Boom. The Fed's books look healthy again. The government can handle its debt, but the dollar loses like 90% of its value against real things. So when you see gold at $5,050, understand it's still 50% cheaper than what it's really worth for fixing things. The drop to $80 silver and $5,000 gold wasn't the end of the good times. It was the last big shake before the big revalue happens. The big players know this. That's why they're buying. But who was selling? Who was wild enough to throw billions of paper gold and silver into the market? We figured it out. It wasn't the Chinese government. It wasn't some secret group. It was one guy. We need to show you this whale, and we need to talk about Bianing. But the reason you should buy this dip is because the crash wasn't real. It didn't change what silver is truly worth. It wasn't some huge new mine found. It wasn't even China trying to keep prices low like some people on Twitter think. We followed the trades, we looked at positions on the Shanghai Exchange, and we found the real reason. It's not a government. It's a gambler. It's one man. We need to talk about Beyonce. You've probably never heard of him. The news doesn't mention him. He's like a ghost. He's a super rich Chinese trader who works out of a plain office in Gibraltar, not Shanghai or Beijing. He's like the Chinese version of Soros, and right now he holds the biggest short bet ever in silver. We spotted a net short of about 30,000 contracts. That's like 450 tons of real silver, 450 tons. Now get why he's doing this? It's not about politics. It's pure math. Bianing isn't short silver because he hates it. He's doing a spread trade. He's betting the gold to silver ratio will get bigger. Our info says he's been long on gold since 2022. He made over $3 billion as gold went from $2,000 to $5,000. He's a bull. He thinks the dollar will collapse, but he thinks gold is the real money king and silver is just for factories. So his plan is simple but strong. Long gold, short silver. He uses gold profits to pay for the silver short. He's betting that in a global slowdown, factories use less silver, but people want more gold as money. He thinks the ratio will hit 100 to 1, and for the last 2 weeks, he's been winning. The big drop played into his plan. Paper silver fell from $121 to $72. Right now on paper, Bianing is up about $288 million on this trade alone. This kills the idea that China wants cheap silver. The government isn't pushing prices down to stock up. One rich guy is pushing it down to protect his gold bet. That's a huge difference. A government has endless money and can hold forever. A trader has limits on how much he can lose. A trader can get squeezed. A trader can run out of cash. And that's your chance. Bian Shiming is sitting on a pile of trouble. He sold 450 tons of silver he doesn't own. He's naked short. He thinks he can buy it back cheaper later. But what if he's wrong? What if factories don't stop buying silver? What if Turkey keeps buying tons? What if the price goes back to $86? Then Bianing goes from being the boss to being the one in trouble. He'll have to cover. He'll have to buy back 30,000 contracts in a market with almost no extra metal left. That's the perfect setup for a short squeeze. The price isn't low because of real supply and demand. It's low because one big player dumped a huge paper sell. But paper sells don't last forever. Running out of real metal does. And while Bian celebrates his $288 million paper win in Gibraltar, the real metal world is turning against him. The vaults are emptying. The trap is ready. And the biggest buyer in the world just jumped in to take the other side of Beyonce's trade. We need to talk about Turkey. We need to talk about the 8.79 million ounces that disappeared from the market. But here's the fun part. Bianing thinks he's the hunter, but really he just made himself the target. He's happy with his $288 million paper win. He thinks he controls things, but he just painted a huge sign saying, "Come get me," for every bull out there. Let's look at his position math. He's short 30,000 contracts. That's 450 tons of silver, about 14.5 million ounces. Ask yourself, does Bian Shiming have 450 tons of real silver stored in Gibraltar? No, he's naked short. He sold a promise. He sold paper. He bets he can buy back cheaper before delivery. This is where math hurts him. Right now, price is $70 to $80. He's winning, but if it goes to $86, if dip buyers jump in, his $288 million profit disappears, then the margin call hits. The exchange says, "Mr. Bean, you're losing now. Give more money or close." To close a short, you buy. He'll have to buy 450 tons of silver. Think about that size. You can't just buy that quietly. If he covers in a quiet market, the price shoots up. His buying pushes price higher, forces more buying, pushes even higher. It's a bad loop. That's why we say Bianing isn't scary. He's actually fuel for the fire. He's stuck in a burning house with no door. He thinks he can get out at $60. But the market isn't going to $60. Physical buyers are holding the floor while he plays paper games. He's basically shorting something that's getting bought up and taken away. And the worst part? He's not just against regular people. He's against whole countries. Countries using this cheap price to grab reserves. While Bian sells paper in Shanghai, a huge buyer turned on in the Middle East. One country bought 8.79 million ounces in 1 month. They basically took half of Bian's position in real bars. Gone forever. We need to talk about the Turkey floor. We need to show the crazy import numbers that prove the real market is ignoring the paper price. So while Bianing sits in Gibraltar messing with paper contracts, the real world does what it always does when something good is too cheap. It grabs it all. The paper drop from $121 to $80 didn't scare real buyers. It started a buying rush. It was like a huge sale for countries, and the biggest shopper wasn't the US or Europe. It was a country right in the middle of everything. We need to talk about the Turkey floor. If you wonder why silver keeps bouncing off $72 and $80 like it's solid, check the new import data. In January alone, while Western news talked about slowdowns and Kevin wars, Turkey loaded up big, they brought in 273.3 tons of real silver. That's about 8.79 million ounces in just 31 days. This isn't a little more buying. It's the biggest ever. A whole country decided paper money is failing and real metal is the safe boat. Put this in context. World silver mining isn't growing much. The easy silver is already out of the ground. Now one country, Turkey, is sucking up nearly 9 million ounces in a month. They're taking it off the market, storing it in Istanbul, using some for factories and jewelry, but mostly as money. Turkey knows hyperinflation. They've lived it. They know when money dies, metal keeps value. So when Banks and Bian Shiming pushed price to $80, Turkey didn't sell. They said, "Thanks for the deal," and bought everything they could. This is a real physical floor. Paper floors break with more paper. You just make more contracts and sell down. But a physical floor is real stuff. You can't short atoms. You have to bring the metal. Every time price hits 72 or 80, Turks, Indians, and rich funds buy real bars, emptying the big vaults like COMEX and LBMA. They're calling the paper sellers bluff. If you sell this cheap, we'll take the real thing. This big demand hits a big supply problem. While Turkey vacuums the floor, the ceiling fell in. Remember the new rules from January 1st, 2026. China put strict controls on exports. They stopped sending key minerals, including stuff that makes silver as a side product, to the West. China is keeping everything for themselves now, for their money plans and factories. The world's biggest producer and refiner basically shut the door. That means less silver available in the West. The supply from the East stopped. What's left in the West is getting bought fast by Middle East and Asia. COMEX vaults are emptying. LBMA is worried quietly. Supply is cut by China. Demand is exploding from Istanbul. It's hammer and anvil. The paper price is stuck in between. This shows the $80 crash was fake. It was short-term game playing, not real supply and demand. Real life says silver is getting rarer, harder to dig, and countries want it for a money reset. But even with all this real support, we have a warning for right now. A risky time is coming on the calendar. We need to talk about the lunar trap and what happens next week when Asian buyers leave. Even with Turkey buying tons, we have to be honest about the next 10 days. Look at the dates. The paper market is about to get risky and empty. We're heading into a time algo traders love to attack. It's the lunar trap. Next week, starting Monday, February 16th, all of Asia goes on holiday. It's Chinese Lunar New Year, Year of the Horse. Shanghai Gold Exchange closes, Hong Kong banks close, Singapore slows way down. Billions in daily trading money disappear. The steady buying from the East that holds price up goes away for a whole week. That makes a thin market. In thin markets, sharks come out. With low trading, it takes less money to swing the price. On a normal day, Bianing has to fight thousands of Shanghai buyers to push silver down. But next week, those buyers are home eating with family. The order book is almost empty. A small sell can turn into a fast drop. The computers know this. They're set to hunt stop-loss orders during holidays. They'll try to push below $72 to test if anyone is still buying in the West. So here's the plan for February 16th to 20th. Expect wild ups and downs with low trading. Probably a bearish spinning top on the weekly chart. Lots of wiggles, but no real move. Price might drift lower to test the bulls left. Watch $72 hard. That's the key line. That's where the last bounce started. If computers break below 72, we might see a quick drop to high 60s before buyers come back. But if 72 holds, if price touches 72 and jumps right back to 75, that's the sign. It means even without China, the floor is strong. Western buyers, Turks, Americans, Indians are holding the line. But the big fight is at $80. $80 is what everyone watches. It's the bears' last stand. They need to keep price under 80 to keep saying crash. If silver gets back above $80 next week during holiday, with no Asian help, the game ends. Bears lose. It means Western demand is strong enough to beat the tricks alone. So next week's plan is easy. Don't freak out. Don't let the slow drift scare you into selling. This happens every year. Money comes back February 23rd. China wakes up ready to buy. They might see 72 or 75 and grab it like a bargain. We could see a fast bounce by month end. Silver could jump from 72 to 86 in 2 days once holiday ends. The spring is tight. The thin time just squeezes it more. Use this week to get ready. Use the wild swings to buy cheap. But no, the $80 crash was made up. It was fake. Fake prices don't last when real metal is short. We need to finish. We need to give the final word on the whale, the floor, and what's coming. Oh, and why the real reasons haven't changed even if your screen price did. Here's the bottom line. We connected everything. We saw the Merkin report saying gold needs $12,000 just to fix Fed books. We showed the whale Bianing shorting, not because he hates silver, but because he loves gold. We showed the real floor from Turkey buying 8.79 million ounces in 1 month while you worried. And we warned about the lunar trap next week, where thin trading might test you one last time. The answer is super clear. The $80 crash was a trick. It came from one rich guy's bet and some worry about Kevin Wersch. It wasn't real change. Actually, the real reasons are stronger than ever. Physical buying is at record levels. Turks are grabbing everything. Indians too. Smart money is stacking. Supply is locked. China stopped exports. Mines can't keep up. Vaults are empty. Price is held down by paper bets with no real metal behind them. So don't get tricked by next week's swings. If silver drifts to $72 during the holiday, know what it is. It's a gift, a chance to buy something headed way higher at a cheap price made by computers. The floor is solid. Physical buyers defend $80 like it saves their money, because it does. The whale is stuck, the squeeze is coming. This is Asian guy. The price is fake, the floor is real.